Let's take a look at the trading week ahead, where we have a holiday shortened week. We will be off on July 3rd as U.S. markets will be closed in observance of Independence Day. But even though we only have a 4-day work week, we have a lot of data on Thursday, especially with non-farm payrolls. And you also have ADP employment and jobless claims, and a lot of housing data as well, which is something that you've been focusing on.
Yeah, I think the housing data is a little bit more interesting. I mean, one of the things that we keep hearing from the Fed is that the employment data is not the only thing they're looking at. They really are now looking also at the inflation data, because whatever kinds of payroll growth we get, what they're really looking for is what the total employment picture looks like. And Yellen has indicated that she thinks that it's still quite weak when you take a look at essentially the entire labor force, right? But the housing data is one of those things that indicates that we have real economic strength. And if they do see that, then that's probably going to propel their action a little bit more quickly. And also, I think just as an investor, that is a real expression of consumer confidence as well. And of course, it's a huge segment of the economy, so it will filter through. So I think that's much more important actually even than the payroll data is.
Well, the earnings calendar is relatively quiet, but there are a couple names that I want to focus on. ConAgra is one of them, and you were speaking about that before, how the volatility will move higher on these names when they're in a restructuring type of story. Jana Partners reported a 7.2% stake, and they're already making demands on getting some restructuring efforts in there and controlling their cost structure. So the historical move on this is about 2.75%, and we're seeing it just about over 4% going into the earnings print on June 30th.
Yeah, that's unusual. This is not a space where you usually see a lot of volatility, but when you start seeing activist investors get involved, suddenly a very sleepy space can become really interesting. And I also think that to me, it tells me a little bit that there's people with a lot of capital that are looking to invest and to be essentially activists are reaching a little bit when they start looking into industries like this one, which tend to be fairly sleepy. I think it's pretty exciting though, because the revenue streams in these businesses can be very stable. So if you do some kind of restructuring, you could get valuations that are tremendously higher.
If we take a look at Constellation Brands, the implied move on this is relatively in line at about 5%. But what's interesting here is it's done well, but the valuation is getting a little bit hefty here.
Yeah, so I'm not that surprised. Look, Constellation Brands, they had done some things within that company before, of course. So they did a little bit of diversification. They had all of these other brands, and they spun some of that off. Great company, and that was the correct move. I personally would probably be a better premium seller if I was actually looking to play them into earnings.
All right, and we'll wrap it up with General Mills. Cheerios. Everyone knows that company. Another one where it's about 1.5% higher in terms of its implied move. They have a restructuring taking place, expected to be completed by 2016. And actually a couple days ago, they announced another job cut of around 725 jobs. So looks like it's ongoing here as well.
Yeah, that's the exact same story. I think probably in that name, I would also be a better premium seller, and probably downside puts would be the way I'd be inclined to play it. It's not one of the names that we hold in the trust, but that's probably, I think, the way to play it in earnings.
All right. Thanks very much, Mike. Have a great weekend, everyone. For TheStreet in New York, I'm Jill Malandrino.